All right, my personal finance students, welcome back. This is my second video that I'm putting out there on the topic of savings. I watched my first video from yesterday, and I have to say, I would probably make the worst YouTuber ever because I cannot maintain eye contact with the camera. Just constantly looking off to the side. Doesn't help that the dogs are out here with me, but hey, doing my best. Again, this video is going to be about savings. Today, we're going to talk about the different savings options that the bank will offer you. Not many people know that there are different options. So that's what we're going to take a look at today. Again, sorry if the dogs interrupt me as we're going along. And then also, again, you can follow along in your notes. If you're following in those notes, remember, I've posted them up on View. Module 3-1 Stark Notes, we are on section 1D. If you're trying to get to the appropriate section, basically, we're starting at the top of page 2 right now. All right, so to recap from the last video, I just wanted to talk about some of those things. Remember, pay yourself first. That's that idea that when you get your paycheck, you take 10 to 20% of that paycheck, and the first thing you do with it before paying for your rent, your bills, your utilities, all that other stuff, first thing you do is put 10 to 20% into savings and investments. For you guys, as high schoolers who are living off of your parents, it should be even more because they're providing most of your necessities. Purposes of your savings, these things are going to come up today a lot in our discussions on the different types of savings options because different options will be better for certain purposes. The two that we have, remember, saving up for a financial goal, something that you're trying to afford. Whether that's a new cell phone, going on a vacation, saving up for your wedding, saving up for a new car, a new home, whatever it might be, making sure that you're putting money aside to meet that goal. The second purpose, that emergency savings fund. If you remember from the last video, I talked about how you want to keep 3 to 6 months worth of income in a separate savings account that you have in the event of an emergency, whether it's medical, something related to your car, something related to your home, or, as we're seeing now, people that are dealing with losing their income, losing their jobs because of this pandemic that's going on. Finally, last thing we talked about is the fact that when you put money into a savings account, you are lending money to the bank. So in return, they're going to let it grow for you a little bit. They're going to give you some interest. Simple interest is where only the money you put in grows. It's not quite the best. Compound interest is where you earn interest on top of your interest. The more frequently it compounds, the better. Best type that you have out there is daily compounding interest. Sorry about that. Fiance came out. She's hanging with me and the dogs right now. She's going to judge how poor of a YouTuber I would be. All right, so remember I mentioned with this video, we're going to take a look at the different savings account options that the bank offers you. Now, I'm going to be honest, there are tons of different savings options out there for all different purposes. There's savings accounts specifically for your children's education fund. There's savings accounts specifically for your retirement. There's all types out there, but we're going to look at 3 primary types of accounts that a bank might offer you. The first is the most basic, and a lot of you probably have this already. A simple savings account. So many of you probably have your own bank accounts, and you're probably most familiar with your checking account. That's your spending money, right? If you go to the store and you buy something with your debit card, or if you go to the ATM to withdraw some cash, that's going to be coming out of your checking account. But remember, I mentioned to you guys, you've got another account that you want for the money that you're saving aside, the money that you don't want to be touching, that you don't want to spend on things. That is, for most of you, probably a simple savings account. They are very simple, as the name suggests. They're very easy to start. You can walk into a bank with probably $10, an ID, and a proof of address, and you can get a simple savings account with that bank or credit union. All right, and it does earn interest on it because it's going to be, again, you lending money to that bank. Now, here's the thing. I'm going to start with the drawback here. I mentioned interest. It does not earn a lot of interest up for you. In fact, with interest rates being as low as they are right now, they're probably going to be around 0.01% for the entire year. Simple savings accounts, simply put right now, are not going to grow much for you. But let's talk about the benefits. All right, there's very little risk with these. You are never going to lose the money that you keep in a simple savings account because it's insured by the government. I'm going to talk about that in a later video. Another big benefit of it comes with this concept of high liquidity. I haven't mentioned this term yet, liquidity, but I want you to think, if something is liquid, what does that mean to you? So something liquid in your mind, hopefully what you envisioned, is something that moves easily, that flows easily from one place to another. And when we talk about liquidity in terms of personal finance, I'll actually write this down. Liquidity. It is how easy can it be converted to cash, right? So how easily can you take the money that's in that account and convert it into cash on hand? Sounds pretty simple for you guys right now because you're used to your checkings and your basic savings accounts. Most of you are probably used to the idea that if you go to the bank and if you want to pull money out of that savings account, you can do so with very little issue. That means that it has high liquidity, right? I think the only limitations out there might be the fact that with some banks, they might put a limit. They might say, hey, you can't withdraw money from this savings account more than 5 times a month, or something like that. Finally, the last benefit that we'll talk about, low minimum balance. It is very, very easy to start these accounts up. Like I said, you can walk into a bank or a credit union with $10 and you can leave with a new savings account. Fairly simple, easy to start up, and if you're in a pinch, if you need that money, you can get it very easily. So let's think about that. If you can get that money very, very easily, would you probably use a simple savings account for A, meeting your future financial goals, or B, for an emergency savings fund? I'm hoping in your minds that you selected the latter, answer B, because think about it. Yes, this money is not going to grow for you much, but if you're in a pinch, if you're in an emergency, you don't have to wait to get it out. There are no penalties for getting it out. You can pull that money out as you need it. So that's why savings accounts, simple savings, are good for emergency savings funds. The second type of account we're going to take a look at is a money market savings account. Now, a money market savings account, the technical definition is that it's a mix between checkings and savings account. You can write checks from these accounts, which is useful. It's beneficial. But when I think about the benefits of a money market savings account, the first thing that comes to mind is that it's actually got usually a higher interest rate than a simple savings account. And it also has pretty high liquidity as well and low risk. You're not going to lose your money in a money market savings account. So what that means, right, is just like with your regular savings account, you can pull that money out when you need it. It's very, very good for an emergency savings fund. So you might be asking me, well, what's the catch, right? It earns a higher interest rate. It has the same level of liquidity. What's the issue? The real kind of one drawback is that money market savings accounts usually require that you have a higher minimum balance. Remember, the balance is the amount of money in that account. And with money market savings accounts, a lot of times they don't like it if your balance goes below $2,500. In fact, that 2,500, I'll write that down because that's normally the common threshold that you see with a lot of these accounts. So it takes a little bit more money to actually start one of these up. Now, with that in mind, pro tip, all right, I'm going to write this this down. Pro tip. Pay attention. You should be using one of these for your emergency savings fund. The way to go about it is when you guys are young, start saving up money aggressively when you get your big boy job or your big girl job. Start saving money aggressively. Put money into your basic savings account. Then, when you reach that threshold, whether it's $2,500 or whatever it might be, transfer that money into a money market savings account because it has higher interest. It will grow more for you. All right. Just to give a personal example, my fiance and I went through this together, and now our money grows more. So, this is something that can be very helpful for you in your future. You definitely want to look at the money market savings accounts that your banks and credit unions offer. So we've been through a simple savings account and a money market account. The last one that we talk about is going to be a little bit different. So as I said, this final savings vehicle, this final savings account option from your bank is going to be a little different. This is called a certificate of deposit or a CD. Now these are a little different, all right? And might be a little hard for you guys to understand. But here's the way it works. Imagine you get $1,000 back. Maybe it's your tax return, all right? You get $1,000 from your tax return. And you say, you know what? I want to put that to work for me for a vacation that I'm going to go on in 18 months, a year and a half. You bring that $1,000 to the bank and you can say, I'm going to put this into a certificate of deposit for 18 months. What they will do is give you a certificate in response, and then they will hold on to that money for 18 months, and it will earn a higher interest rate, a higher rate of return. Now, also, it's low risk. You're not going to lose your money here, and it will grow quite a bit more depending on how long you keep it in there. The more money you have in there, and the more that the longer you leave it in there, the more it's going to grow. Now, here's the drawback: is that low liquidity, right? You told them, you promised them you're going to keep it in that bank for 18 months. And in return, they said, cool, we'll let it grow more. But the catch is the fact that if you need that money and you feel like you're in an emergency and you need to withdraw that money, they're going to charge you a pretty heavy penalty for that. So it's got low liquidity. There's an issue with taking it out before you reach that maturity date. All right. And that's kind of that balance that you have to strike with your savings accounts. When you think about it, right? Does it have either high interest and low liquidity or low interest and high liquidity? You need to kind of strike that balance for different purposes. Now, if you're thinking about this, let's get to those purposes, right? Is this going to be good for meeting some of your future financial goals, or is this going to be good for an emergency savings fund? Hopefully you were good thinking while I was making funny faces at the camera. But what you should have said was that this is good for future financial goals. These are not good certificates of deposit. They are not good for emergency savings. Because again, you get charged a penalty if you withdraw that money early. But if you're working towards a certain goal, like a vacation or a new car or down payment on a home or something for your wedding, right? It's great for that. I actually, last time I used one of these, I'll even say, was when I was saving up money to buy a wedding ring for my fiance. Fun fact, gentlemen, how much should you be saving for your wedding ring? The old rule of thumb is that you want to spend 1 to 2 months worth of your income on an engagement ring. I didn't follow that. I think that's a foolish rule to follow. I am not spending $5,000 on a ring. Anyway, that's your certificate of deposit, the third of our savings vehicles. To recap, all right, 3 different types of savings accounts that we've been through that the banks offer. Simple savings account, probably the one that most of you have. Easy to start, very easy to get your money out. It's just not going to grow much for you. Good for a rainy day fund. Money market savings accounts. All right. Better interest rates than simple savings and still keep that high liquidity. The only drawback is that it has a higher minimum balance. You need more money to start one out. But if you can get that money saved up and start one of these out, they are great for rainy day funds. Finally, the certificate of deposit, a new concept for a lot of you, but you put that money into that account for a certain period of time. You wait until it matures, and it will grow more with you. It'll grow with a higher interest rate. Great for those short-term and medium-term goals, whether it's a few months or a few years. This is a good place to save some money because one, you're not going to withdraw it early or else you'll have to pay a penalty. And two, it'll grow more for you. So you don't even have to do the work. That money just grows and you can keep putting money into them as well. All right, I hope you guys enjoyed this video. If you have any feedback for me, please send me a message on Canvas, send me a message on Remind, send me a message in View, email me, whatever it might be, even if you guys just want to say hi. I hope you guys are doing okay. Stay healthy, relax, enjoy yourselves, and hey, try something new, all right? Take a look at some of your bank options whenever you get a chance. Peace.